Good morning, everyone. I'm just wondering if everyone could do me a small little favor. And if you can hear my voice, could you press the raise your hand button on your little panel? Fantastic. So somebody raised their hand, so I'm guessing everyone can hear me. Thank you so much. Really appreciate that. My name is Helen Muller, and I'll be presenting our course this morning on operating expenses, auditing operating expenses in Probe Audit. So welcome to everyone. So glad you could come and join us this morning. It will hopefully be a pretty interactive session. If you could, what I would suggest is that either you, well, if you manage to do it, to set up with a projector displaying the webinar and what I will be doing on my screen, so you are able to set up and follow along on your laptop. Otherwise, if you weren't able to do that, my suggestion would be if you're with other people that are in the course with you and you're all in the same room, perhaps work in teams of 2, so one of you actually follows along with doing the stuff, or you take turns following along and performing the exercises, and then the other person can leave their screen on to follow the webinar and what I will be doing on my screen. Right. Sorry, I'm just having a moment with my laptop. All right, so as we have done previously, we're just going to rehash. We are working with exactly the same clients as you have been working with for the other sessions, especially last week with cash and cash equivalents. And today we're going to do operating expenses. We're just going to go through a little bit of the risk assessment just to orientate us on what we're going to be covering today. And then we're going to take a look at the work program, and we're going to perform some testing on operating expenses. All of you will be muted, obviously, so we don't listen to random things happening on your side. Please do make use of the question function to ask any of your questions that you need, or if you need me to repeat something, post it on the questions chat. I do have it open and I'll try to keep an eye on it. We also I do have some people assisting me this morning who will also make sure we get to your questions. If you lose signal, please exit and try to enter again. Hopefully that will help. We are having quite a lot of internet problems since yesterday, pretty much in Africa. Everybody is having some issues. So I'm also not going to put on my video at all today because I am concerned about what effect that will have on the audio and what's happening on the screen, etc. So I'm not going to let you see my face today. I apologize, but I'd rather have you follow along with what's going on. The recording you will get after the session. It will be made available, and you will be able to go and rehash whatever we have discussed today. So if you miss anything, please don't stress and panic about it. You can go and watch the recording. All right, so let's do a little poll just because it's fun. So does everyone have the course material downloaded? All right, I see there's quite a number of people that don't have it downloaded just yet. We have posted a link in the chat for you to get the course material if you haven't downloaded it yet. So it should be in your chat box. You should be able to click on a link. You should be able to navigate to an operating expenses probe audit operating expenses folder. If you open that up, you can download the material. It is the Caseware file, wrap up manufacturing, and then there will be supporting documentations. Supporting documentation and other documents. I can see some of you are not able to see the link, so I'm going to, oh, everyone can't see the chat box. Let me see if I'm able to repost the link for everybody. If you'll just give me one moment, I will have someone repost it. All right, that will happen shortly. Oh, there we go. Perfect. Okay, so the link has been downloaded. So please, can you just let me know if you managed to find it? I'm going to close the poll for now. I do see at least everyone has found my cool little question box. All right. So if anyone is still having any problems, please can you type into the question box. If I do not have any responses from here at 9:08, I will assume everyone has managed it. So please let us know. Okay, so the next poll is just to establish how many of the sessions you have managed to attend so far. If this is your first one, welcome. If you have attended, I see a lot of you have attended all the sessions. That's very good to hear. If you haven't attended all of them, that's also all right. You haven't missed too much in terms of what effect it will have on today's session. Okay, and then we have also some newcomers today, so welcome. You'll be able to catch on pretty quickly. Do not fear. Okay, and to everyone that hasn't managed to attend all of the sessions, the recordings are available for you to go and watch, and I would suggest that you go and watch them. It'll be, it's nice just to catch up and follow along with everything. But like I say, if you haven't managed to attend the other sessions and this is your first one, then it is not a problem. It is not like we are just going to assume you, there's no background knowledge required. Okay, let me share those results. So welcome. Okay, and then I'm just trying to get my slide to move over. All right. So who's our client today? Our client is Wrap Up Manufacturing. So if you have dealt with them before, it's the same client we have been dealing with throughout the series. The financial year end is 30 April 2023. The accounting framework we're working with is IFRS for SMEs. And our accountant is, his name is Andy Crack. All right. So just to orientate us a little bit, we have this process flow slide once again, which some of you will be familiar with others, don't fear, I'm about to go through and explain the whole thing. So our financial statements, so if you start all the way on the right-hand side of the slide, you will see we have financial statements. And as auditors, we are auditing the financial statements. The shareholders are, others, are requesting that we provide them with some assurance on the financial statements that the financial statements are not materially misstated. So we don't do 100% of testing. We are not forensic auditors. We do not give 100% assurance. We give reasonable assurance that the financial statements are not materially misstated, which is also why we calculate the materiality figure. The financial statements come from the trial balance and other being other information such as loan terms, which you'll get out of a loan agreement, or securities provided to the bank, those sorts of things. And the trial balance is obviously giving us our numbers that are going into the financial statements. The trial balance comes from the general ledger. And the general ledger is basically the listing of all the transactions that have gone through the entity. Specifically regarding what we're doing today and expenses, we do not have a subledger today, and usually there's no subledger between the processing of a supply invoice into the general ledger, but it is possible that you deal with a client or a system that has a subledger there, so you would just insert into there, oh, we have a little subledger. Okay. The general ledger is generally being updated with transactions which are processed via a supplier invoice. So the client will see a screen which they are able to process the information into. It's not straight into the general ledger, and that supplier invoice, once they say update or however their system specifically is working, they will be able to update the general ledger with the transaction. So how do we get to a supplier invoice? Well, first someone has to take some sort of an action. So someone makes phone calls, for instance, and when they make a phone call, they incur a charge. The call provider, service provider, will issue them a supplier invoice for however long they have spent on their phone calls for the month. That supplier invoice gets processed into the general ledger. General ledger is summarized into the trial balance, and that trial balance goes into our financial statements. Okay, so today we are going to deal with someone had an action, they did something, incurred a consulting charge, they went to go speak to someone about their HR policies and procedures. This was an expert, and that expert then gave them some advice and helped them implement some good HR management procedures. The consultant then gave us an invoice. That invoice then got processed as a supplier invoice, and this went into the general ledger, which then summarized into the trial balance into the financial statements. Okay, so hopefully we all on board with how the process flow is working. Then let's just have a quick little rehash on the big picture of what we are doing in the audit, because we all need to understand the big picture in order to be able to understand what we're doing and to get it right. So in our, what happens in an audit is we are actually auditing financial statements, but the financial statements come from an accounting framework. So an accounting framework, such as if it's for SMEs, will have principles contained therein, which tell us how certain things should be measured. For instance, revenue, share-based payments, cash and cash equivalents, so financial instruments. So the accounting framework will tell us how things should be measured, and it also tells us how the presentation and disclosure should go into the financial statements. So what would be important to the users of the financial statements, and it says you must give them this information. So the client will put together their financial statements from the account principles contained in the accounting framework, as we may come across when you go out on audits. Maybe you have come across it already. Sometimes clients, what they process into the system is not fully in line with the accounting framework, and then they make adjustments to get to the financial statements. So when we are auditing, we need to consider what is sitting in the accounting framework. So what does the accounting framework tell us the measurement and the disclosure and the presentation should be? And then we must look at what is in the accounting records, and is that what is required in terms of the framework, and therefore is that what has flowed into the financial statements. So that's really just a very big picture overview of what is happening in an audit. So we need to consider various things while we are auditing. Right. So let's get started. Let's go off to our file. If you haven't opened it yet, please do so. I'm just trying to open my file, but I'm having a bit of a challenge. Anyone? And you would recognize my background there. Okay. So to get us, I'm going to do, let me share with you how I here and what I do here, so that you're able to go along. Right, so in your document manager, once you have opened your file, I'm going to go off to 1051 in the file, and I'm just going to show you what happened, a short summary of what happened when someone did the planning in the file. So someone, a more senior person, went and they did the planning in the file, and they wrote certain risks, and they gathered an understanding of what's happening in the clients and the accounts. So they've already gone and completed the planning, because in case it hasn't been, I'm sure it has been mentioned, but let me re-mention to you, things that happen or things that we do in this section will affect the rest of the file. So planning does need to be completed before we are able to get the correct audit program out of the software, because the audit program is going to be formulated through what risks have been raised, what transactions did we tell the software are in there, etc. All right, so I'm going to go off to 1051 first, and I'm going to show you what is happening. In 1051, I have navigated down to operating expenses. So if you are not there yet, please go off to operating expenses. So then you see the little block with operating expenses covered. All right, so we can see we've got operating expenses of 19 million in the current year, and in the prior year, 17 million. Someone has commented for us. There may be times when you go on audit and you get, for instance, allocated operating expenses, and you will have to come and complete this section. Also a possibility. It just depends on how the firm functions and what their methodology is, who has to go and complete this section. Right, so on operating expenses, someone said year on year, the change in operating expenses does appear reasonable, and there's no unusual accounts noted on the lead sheet. If you click on the blue underlined operating expenses wording, it will open up a lead sheet for you. I'll just make that a little bit longer. This is the, and in case you have forgotten what a lead sheet is, it's the zoom in of that section of the trial balance. So it is, on our trial balance, we have all the accounts listed, the share capital, retained earnings, all the balance sheet accounts, and we also have all the income statement accounts listed. And those we would have had to map. I hope you remember, or you've at least attended some of the sessions on mapping. So you map the accounts to the specific section in the Caseware file, and then it gives you, when you open the lead sheets, the lead sheet is basically a zoom in of that particular section in the file. So essentially what we're looking at now when we look at this lead sheet is what has been mapped to operating expenses in this file for this client, and what will appear then in the line called, well, it depends on the way that the client presents their income statement, but if you are presenting, for instance, by function, then operating expenses would be a line that says operating expenses and have a total there, and that total would be equal to what on this lead sheet. Okay, so what's in here in operating expenses is things like audit fees, bank charges, commission. There's also indirect employee costs as opposed to direct employee costs. This client does present their income statement by nature. So they've got indirect employee costs here, a direct employee cost, so the employee cost that is the wages, that is the employees that are directly working on the manufacturing, making products, their expense is sitting in cost of sales. Right. So there's nothing unusual sitting on this lead sheet in terms of what it should be, so I'm just going to close this one. However, if we look, someone has said to us, the client raises a monthly provision for audit fees, and we have raised an overs and unders journal to reverse this. The reason being, so this is often a thing that pops up in our clients, they will raise a provision for audit fees because they know at the end of the year I'm going to be audited, so they almost want to provide for it during the year as the year goes, so that at the end of the year they've got this in their TV, so they know I've got to set aside this amount for my audit But the problem with that is no service has been rendered yet. So there is no present obligation for that expense, that liability that they raise. So they shouldn't be raising a provision for audit fees because the audit fee arises once the service is being performed. Right. So someone has gone through the TB and they've said, let me show you back on the lead sheet. This amount of audit fees here, they've gone through the general ledger and they can see the client is actually raising a provision. So if you will go back to your document manager and up at the top, go to adjusting entries for me. So up here at the top, so if you click there and you use the little drop down, you will see there is a journal called HM2. So click on that one for me. Right, so we can now see someone has gone and reversed their provision. So what has happened? They have put in the date, the year-end date, the reference being to 1051 OpEx, because we discovered or found or identified this error when we were doing 1051 in the operating expenses. We are not going to reverse it on the TB. The client said, just pass it as an overs and unders. I don't want to adjust my trial balance for it. So we are going to accumulate it on our overs and unders schedule. It is not material. So we are raising an unrecorded factual. Factual because it is an actual number in my TB that I know is incorrect. There's no judgment there. They are incorrectly raising a provision for audit fees, and there is no present obligation for that audit fee at the time when they raise it, so it needs to be reversed. Okay, so a brief description has been provided. The client incorrectly raises a provision for audit fees and it's not a valid liability, so we reverse it. So in order to reverse an expense is usually sitting as a debit. So we have a debit in audit fees. So now we want to credit audit fees with the 240,000. Let me just go and show you that lead sheet once again, but this time I'm going to go to the full lead sheet. Right. I will show you also in a moment in the GL how they would have identified this. So there's the amount, 240,000. So the journal entry went credit the expense. The other side of the entry where the client raised it, their original entry was to accrued expenses. So they went credit accrued expenses, debit audit fees. So we want to reverse that. So we are going to debit accrued expenses. So debit the liability, and we're going to credit audit fees. Okay, so already at the analytical stage, at the planning stage, we have identified that there was an error. Right, I'm going to close that. If you will go to your supporting documents, everyone, there is an Excel sheet called Wrap Up Manufacturing GL Operating Expenses. Please open that up for me. Okay, so once you have that open, what we have done for the purposes of this course, we have extracted the operating expenses general ledger. So everything that is on the lead sheet is sitting in this Excel sheet in the first tab called OpEx extract. All right. The next tab is general expenses. This is just the general expenses that we will be testing today, but I will explain that further in a few moments. So if you go to the OpEx extract, we can see here is my audit fees account. And in my audit fees account, I can see these are not, this was journal's process to raise the audit fee, and it says monthly provision. And every month the client has raised a provision for this audit fee. So in that way, we could see in the general ledger, this is not coming from an invoice, a supplier invoice, or a payment. So it wasn't that we had a physical expense as yet. The action hadn't been taken, right? If you go back to our process flow slide, the action hadn't been taken just yet. And so we shouldn't really have this in our GL as yet. And so we can see we should be reversing it. All right, so that's how that was identified on 1051. So let's jump back there. Also within the operating expenses on the income statement in this client is depreciation. This depreciation is pretty much in line year on year, and usually depreciation will get tested with PPE. I say usually because sometimes it will be a little bit different, so you always need to check in about what's happening. We'll touch on that again later in the presentation as well. We have indirect employee costs. There were no unusual changes noted. For our leases, we had no unusual changes, and the clients indicated there were no new leases. So whoever did this operating expenses assessment or analytical went and asked, did we have any new leases? And the client said, no, we did not. And there were no previous misstatements noted in the client's accounting for leases. We have some remuneration other than employees. What is what is mapped here is our consultancy fees for business purposes, and we will inspect those for our tax calculation as part of our tax audit. So in the tax section, someone will go and look specifically at consulting fees to make sure it wasn't non-deductible consulting fees. And then the rest of the lead sheet is made up of other expenses. And we've, as already mentioned at the top, we had auditor's remuneration, which was a provision which needed to be reversed. And we've raised that overs and unders journal for that. Right, the type of procedures that were performed as risk assessment procedures, we inquired with Andy Crack, our accountant, on the 17th of June about what was happening in my other expenses section. We inspected the general ledger accounts, and we did some analytical review as above. When this person went through the trial balance and the lead sheet, they went and checked the lead sheet looks like it is mapped correctly, although we will, as part of our course today, also look at classification of accounts, or just consider it. We'll just have a little touch on that when we do the testing. So the accounts appear to be correctly mapped. Were there any unusual accounts? Nothing noted from the lead sheet. So there was nothing odd looking, no brand new expense which was out of kilter with the rest of the expenses, no existing expenses that were significantly higher than prior years, or looking just odd. So at the point of planning, no one identified anything unusual with the accounts. Then we compared the account balances year on year, and the person said they've done this and there were no unusual changes noted. We reviewed the underlying records for unusual items. So the general ledger accounts included in this section have been inspected. Oh goodness, and they noticed something odd again. So they've gone through the general ledger and they have seen that there is an insurance claim netting off of expenses. And then the client indicated that the journal should be passed to reallocate the amounts to other income. Okay, so let's go see what they are talking about here. So if you open up your GL again, and then if you can just scroll down, or you can Control F and put in repairs. It's not the first one that will pop up. It is the account 4350001. So in the repairs and maintenance account, take a look at this odd receipt here that says claim. Okay, so usually why this is flagged is because you will see, if you scroll through the general ledger, that most of it will be a debit, as we expect expenses to be, and maybe there might be a return or a credit note coming from our supplier, and so we will have a credit. But now this is an actual receipt from what appears to be, the client has described this as a claim, and even in the description says claim for fridge, microwave and urn. Right, so that's a little bit odd. So this person went and asked the client, Andy, what is this amount that's sitting in the account that says receipts and it's a claim? And Andy then went to investigate, and Andy sent us an email. So if you go into your folder called other testing material, there is something called an email read the claim for the fridge and the microwave. So open that one up. So Andy emailed us back and he has said to us, good day, the transaction to which you refer was an insurance claim received for the fridge, microwave and the large urn. These were damaged with an electrical surge and then the insurance paid out to replace them. He further tells us we did account for the output VAT already and it was submitted with that month's return because in terms of the VAT legislation, we have to pay output VAT on our insurance claim received. And just logically, if you think about that for one moment, because when we actually paid for those items, we would have claimed the input VAT. So now when we receive compensation for if they are damaged, we should pay over some of the VAT for that. All right. He says, so as I understand your issue with it being in expenses, you can pass the journal to move it to an income account. We will pass the journal with any others that need passing at the end of the audit. So he's basically saying, we're not going to pass it now to confuse the issue, to now be with have a different number to what you have. So you pass it, and then right at the end, we will, when you give us out your list of journals, we will take all of the journals and we will pass them so that we have the same closing balances as what is reflected on the financial statements. Okay, so just to rehash how someone came across that, they have gone round to, someone went through the GL. You can also use an analytics tool such as IDEA. So IDEA will be able to sort, flag certain things depending on what parameters you have inputted into it. So instead of scrolling through the whole GL account for the section, you can use an analytics tool which may be a little bit easier. For our purposes, someone has scrolled through the GL and noted the unusual transaction. Okay. So they noted it, they asked about it, because we can't just make assumptions about things that are in the GLs, because the description could always have been incorrect, but the entry correct, right? They could have been talking about they made a claim to the supplier because the items weren't working, and then the supplier credit noted, or whatever the case may be. All right. So they noted this, and he replied, and he's come back to us and said, go ahead and pass the journal. Right, so go back into your Caseware file and again go to adjusting entries. So if you go through to adjusting entries and you pop down, you can go to HM3. So I did leave the journal there for you. So if you go to HM3, I just want to also show you what the difference is now. So remember, in the email, Andy said, please go ahead and pass the journal. So we're not going to record an unrecorded factual amount. We are going to record a normal adjusting journal. So the normal adjusting journal, again, the reference is the OpEx-GL, because that's where we have identified this amount. And from 1051, our description is that there was an insurance claim incorrectly accounted for in the repairs and maintenance expense account instead of other income. Right, so just to also explain a little bit background there, the accounting standards tell us we shouldn't offset things unless specifically allowed. And if you go and look at either IS 16 or section, I really want to go with section 17 in Interest for SMEs, but stand to be corrected about that section number in PPE. It does talk about compensation being recorded in profit and loss, and also it should be in other income. It is a separate income amount. It is not, the principle is we should not offset, and it also doesn't go to profit or loss on PPE, which is also a common thing that happens with clients. They will put the insurance claim to profit and loss on a PPE item which has been scrapped or damaged. It is not the correct treatment. The insurance claim should be reflected in other income. Okay, so what has happened If you remember, in the GL, it is coming across as a credit to our repairs and maintenance account. So to pass the journal, we have gone and found, or you can even type in the account number. So if you want to have a little practice, you can type in the number with me. We will delete these lines to not throw out my TB, everyone. But let's have a little practice, right? So if you type in the account number you could have gotten from the GL or the TB, or you can do the little search button and go and find the account through the lookup screen. Right, so I'm going to type in the account number, which will bring up the account for me. Then I need to go and double check. Let's double check our amount is correct. The amount that we need to debit to this account to move the credits out is 31,626.09. Okay, so 31,626.09. And then we need to credit an income account, and specifically a sundry income. So this insurance claim is not revenue. It is not part of our normal operations, our day-to-day. It is not our main business to get insurance claims. So it cannot go to revenue. It is more appropriately to put it into an other income account. So in this case, let's use the little lookup. So we would go and look up and find a sundry income account. Sorry, I passed it. Conveniently, this client has an account called Sundry Income Insurance Recoveries. All right. Sometimes you might need to go and check in with the client. Which account can we use? Also, just check the mapping in Caseware to see that we are using the correct account, because we want it to be mapped to other income. And sometimes the client doesn't have a specific account, and we will need to create a new account with an appropriate number. Usually we don't interfere with the client's account numbers. We will put it something like Audit 1 or something to show that it was an auditor created account. And then we will put in an appropriate description such as Sundry Income Insurance Recoveries. Okay, so select that account. Automatically, it should give you the balancing figure of that journal. So if you did have to account for the VAT leg also, you would then have to just retype in this amount as a whatever number it should be to do the third line, which accounted for the VAT. But do remember that Andy did say to us, he's already accounted for the VAT, so there's no need for us to do that. All right. Now we've practiced, but I want us to just remove those lines. So what you are going to do, sorry, I did that one already, but I was just double checking. So you are going to click on the line that you want to remove, and you can press Control D, and that will delete the extra lines we have put into our journal. So delete the 2 lines you have added if you followed along with that, and also added lines to just get a little bit of practice in for journals. So if we close this, we can now see, so on your lead sheet, do you see you have an adjustment column? Sometimes you might have 2 columns here, one for adjusting and one for reclass, depending on how your lead sheets are set up in your files. So adjusting, you can see now adjusting has a balance. So if you scroll down, you will be able to see in the repairs and maintenance account, there has been a journal which was passed, and the result is an increase in repairs and maintenance. So logically that makes sense, because yes, we debited the account, we wanted to remove a credit. Also, if you do double click on that figure that is in the adjusting column, it will take you through to the journal that was passed, not the full journal, but it will show you the leg that affects this lead sheet. Okay, which is quite handy sometimes if you are reconciling something to your lead sheet and now there's a journal and you need to put in a description on your reconciliation. It's a quick, easy to go and check what the journal was that was passed here. All right, getting back to 1051. So we did identify an unusual item. It has been sorted now. Then we need to evaluate whether our accounting policies were appropriate and consistent, and someone has gone and looked at the prior year audit performed with the accounting policies, and the accounting policies were consistent with IFRS for SMEs. If we do have draft financial statements, we are able to check that the accounting policy is appropriate. In this case, there might not be a specific accounting policy called operating expenses, right? But there might be there might be an accounting policy for employee costs or short-term employee benefits or something else. And also we should be able to just see the consistency in the presentation, etc., etc. Okay, I see we have a question. After an adjustment has been raised, can it later be amended or deleted? Yes, and I think that's a really important question. So if you are sitting in the adjusting entries screen and you go to the journal that you want to delete or change, you are able to. So if I saw, oh, my repairs and maintenance amount shouldn't be that, it should actually be 20,000, I can change it here and it will change the journal on the lead sheet. So let me just show you. First, I'm going to copy this amount so I can paste it now. Okay, so if you need to change it, you can go in and change the number. You can also change the account if you realize I've done the incorrect account. I'm just going to show you the lead sheet. So you can see on the lead sheet that the number has now changed to the new journal number. So you can just edit a journal if you make a mistake. You don't need to reverse the journal and then repass the journal. And I'm sure if any of you have had any exposure to doing accounting, a lot of accounting systems, once you've passed a journal and updated it to the system, you cannot go and delete that journal. What happens is you have to do the correction, you have to reverse the journal, so pass it in the opposite way, and then you have to re-raise the correct journal. But it doesn't have to work like that. You don't need to work like that in Caseware. In Caseware, if you want to edit a journal that you have already raised because you've made a mistake, so either it's the wrong account or the wrong amount, you can edit the journal. You just go back to the journal in the adjusting entry screen and you can edit it. If you realize that you don't need the journal at all, you can click on the little delete button up at the top, and that will delete the whole journal. Okay, so obviously that number will go away, but you can then re-raise a journal called HM3. It's not going to give you some sort of an error, but you can delete a whole journal if you realize, oh, oops, we shouldn't have passed that journal. Okay, so there's a lot of flexibility there also. In case you do, I know a lot of us get very nervous when we have to pass journals in the accounting records. Let me also put you at ease that already when I was an audit manager, I managed to pass journals the wrong way. Under pressure, things happen. It was the day of submission of the financial statements to a certain regulatory body for this client, and I passed a PPE journal the incorrect way. And then I had to quickly phone the client and say, oh my goodness, I've made such a mistake. But I could come back and edit the journal. And if you are the drafters of the financial statements and you edit the journal, it will also reflect correctly then with your correct amounts in your financial statements. Okay, hope that helps and answers that question. Right. Okay, so the accounting policies would have been checked and the consistency of presentation. So down at the bottom here in this transactions and balances box, this little box is what is going to also, I want to say, tailor probe a bit later on and in the audit program. So there's sort of two little things that happen or go into your audit program. One being, do I have a risk raised? And two being, what types of transactions have I told the system is in this account, in this section, sorry. Right, so we do have employee costs in our operating expenses, as I showed you on the lead sheet. And we've also just mentioned in the planning that employee costs are split between cost of sales and expenses. but they are tested together. So today we're not going to cover employee costs, but employee costs is the next session which is coming up, and we will do some employee costs testing then. Short-term paid absences we'll also cover when we cover that session, as well as remuneration and the disclosure. There's nothing specific in our operating expenses that is needing to be ticked here. For instance, accounting estimates. So accounting estimates might be, for instance, if you have ECL, so expected credit losses in full IFRS, or there's some sort of, let's say, I'm trying to think of something that would specifically go to expenses, but I'm, as always, under pressure, failing to come up with an awesome example. But ECL is not a bad example. So if I had, or even a provision for bad debts, depending on where it would be tested, would depend on whether I tick the box for an accounting estimate or not, and also depending on whether it is, I will say, something significant, so not clearly inconsequential, because if there's a really just trivial estimate which happens, then we're not necessarily going to tick the block, because we're not necessarily going to go and test it because it's trivial. Okay, but it depends on the assessment and understanding of the estimate as well. All right, so that's 1051. So let's just quickly jump to 1220. So in 1220, if you open it up, let me just show you in the document manager. Sorry, everyone, I opened mine earlier just so that I didn't have to, we didn't have to watch the mesmerizing blue circle together. But I do love that circle. Let me be clear, I love the mesmerizing blue circle, but I thought for, in the interest of time, and also just, I know there is always a little bit of a delay changing screens, I opened all of my documents earlier. All right, so if you want to follow along in 1220, 1220 is sitting in the audit planning folder up at the top. So there is 1220, and if you double click on it, you can open it. You can also, if you're struggling to find it, Control F, and Control F will bring up this little find block, and you can type in 12.20, and it, when you press next, sometimes if you're after it and you press next, it's going to pop up with a little warning to say we couldn't find it. Do you wish to continue searching from the beginning? You can say yes, and it will find it there at the top. It is just asks you that because you are starting after the document and it is searching the rest of the file, and you need to tell it to go back and start from the beginning. All right. The other alternative is if you type in 1220 in this block here, it will open the document for you when you press enter. All right. So on 1220, it is the audit plan and strategy. So this is where someone has gone, and this is sort of going to show us the summary of what risks have been raised. So if you go to your navigation bar on the left-hand side, go and find operating expenses. It's, I'd say, probably closer to the bottom than it is to the top. So if you click on that, the block will be closed, but if you press on the little plus button on the left-hand side of the title, you will be able to open the block. Okay, so on here we can see that for occurrence, we have a medium risk. For AVA, or accuracy, valuation and allocation, we have medium. For cutoff, there's a medium risk raised, and for presentation and disclosure. No risk in this file for this client has been raised for completeness. So we're not going to cover completeness in our audit program, but let me just cover that or speak through that now. So completeness testing is when we test whether everything that should have been recorded has been recorded in the GL. So we are worried that there are transactions that I should have had in my GL, but I don't have them in the GL. And because they're not in the GL, that means they didn't go to the trial balance, which means they didn't go to the financial statements, right? So completeness is us. When we do a completeness test, we want to make sure that everything that should have been recorded has been recorded. We will then go from the source. So let's quickly pop back to the slide. Sorry, everyone, I've got so many things open. Right, so let me just go back here. sorry, struggling to find my slide today. Okay, so if you'll remember, and you'll remember perhaps in the earlier sessions as well, when we do completeness testing, we want to make sure that if something happened over here, it ended up in there. So to test that, we would start at the source and then work our way through to make sure it got into the accounting records. All right. So in this case, and often with expenses, if there is a completeness risk, it does need to be tested. However, often the completeness risk is raised with the payables side and is tested in a test called unrecorded liabilities. So unrecorded liabilities is a test to see that all the liabilities are recorded that should have been recorded, and sometimes the other side of that liability recording, or often, would be an expense or a cost of sales somewhere in the income statement, right? So we would then, for instance, an unrecorded liability test could be, depending on your firm's methodology, that they go to the bank statement after year end and select payments made to suppliers after year end, and they will ensure that that payment is made, or that if that, well, they will trace that payment through to the relating invoice or what is being paid, so the statement or the supplier invoice being paid. They will check what date those invoices or statements are, and then they will trace it through to, if it is before year end, so our year end here is April, so if I selected a payment made in May for one of my suppliers, I would then go and look what was paid. There might be invoices there that we are paying for April, because a lot of suppliers provide 30-day terms, and then they will establish, okay, we have paid these invoices that relate to May, let's go and see that those invoices were recorded in the general ledger, i.e. the liability was recorded at year end, and therefore we have some comfort that the financial statements, or specifically the expenses and the liabilities side, the payable side, is complete. All right, so in this case, in our little case study today, completeness has been tested with the account payables unrecorded liability test. So we are not going to test completeness today in our case study. If you did have to perform a completeness test from this side and from this in the expenses section, then you would do probably something similar to what you do with the unrecorded liabilities test, because you need to start somewhere from a source. And sometimes that will be an actual payment that happened that we can trace back to the source to get back to the accounting records. So it'll be something similar along those lines. I will warn you that so some clients will have a file filled with supplier invoices. That file, there is no way for us to tell if the file has every invoice in it. So there's not a way for us to verify that the population is complete. So it's usually not the best starting point for the unrecorded liabilities or the unrecorded expenses test. The bank statement is probably, it's much more reliable in that sense, because it is payments that we have made. So it's not foolproof, everybody, before everyone is up in arms about completeness. It is not foolproof, but it provides a little bit more comfort than if we pick up a file that is filled with invoices that may or may not have been filed. Okay. So in here we can see we have some risks raised. We'll be able to go to the detail of those risks when we get to the audit program. We'll just quickly cover this. There is no management expert that we need in this section. We don't need an auditor's expert. The external confirmations, we're not going to get any for expenses. There was no need. There is no work that was performed by another practitioner regarding our other expenses testing. And we deemed it sufficient that we do our required procedures with some substantive sampling because we decided we don't want to just test material significant and unusual items. We want to also test our or do a sample of the expenses. Okay, we're not relying on tests of controls evidence from a previous period. In terms of laws and regulations, let's just take a little pause here for one moment. So laws and regulations that could affect expenses would be something like VAT. In Probe, the VAT procedures will automatically pop open when we say VAT is applicable to our audit. It will automatically populate in the audit program. So we do not need to specifically click this. So in terms of when this would be clicked by the person who's doing the planning, remember, not necessarily you, the person who's doing the planning, when it will be ticked is when we have a specific law or regulation that is affecting my expenses, not my general one. So that is a very general law regulation here in South Africa. So we wouldn't need to tick it then. It is always going to be on. But if it's something else, maybe a specific law or regulation that's applicable to the industry you're working on, and we specifically want to, or let's say have to test it, and that testing has to happen in expenses, is when we will tick this little block. And then we would need to go to the audit program and type in the procedures of what we would be testing. Okay, please don't panic about that now. That really is something that a more senior person would need to do when they've done the planning. And obviously there will be input from managers and partners, etc., into the planning of an audit. All right, and then attending a wage payout. We are not attending a wage payout for this client. Okay, so let's go off to the audit program. I'm going to have you open it, and then we're going to take a quick 10-minute break because I'm sure this was a lot of information to take in. But if you scroll down your document manager, section 750 is where the operating expenses are, and 750.10 is our operating expenses work program. I call it the audit program. It's the same thing. The reason it's called the work program is because obviously we also do independent reviews. And in that case, you can't call an independent review an audit program. Okay, so our operating expenses work program, if you could double click and you open that up. I've already opened it up on my side, so I'm not going to do it again. If you are lost in your document manager, remember your Control F trick. You can Control F and go and find 750.10. All right. Okay, so we're going to take a short break for 10 minutes, and then we will continue. We're going to go through a little bit of the audit program, so the risks, and then we're also going to get to the part where you are actually we are going to go through some testing, and you are going to also perform some testing of other expenses in the file. So enjoy your break, everyone, and we will be back shortly. Right, welcome back, everybody. I hope you got up, stretched your legs, got some coffee. I have sat on the other side of audit training. I understand the struggle. It is indeed real. All right. Hopefully we're getting to a little bit more excitement now. Okay, so back before the break, you'll remember I asked you just to open up your audit program. So we're now going to just take a look at what risks were raised for those risks levels we saw coming across in 1220. And then we are going to just take a look at a few of the audit steps that we're not going to perform all of the steps today because there is not enough time to audit the whole of other expenses in 3 hours. But we will do some of the testing on occurrence and with the VAT procedures. Okay, so if you take a look at your audit program, I'm sure you are familiar now, but we're going to take a little rehash because there's nothing wrong with a little bit of repetition. So the risk assessment is showing here at the top. Most importantly, please take note of the overall materiality and the performance materiality of 800,000 Rand. We have the assertion levels. You saw this coming through in your 1220. And then we have the trivial amount of 30,000 and individually significant item of 200,000. So the risks, in terms of the risks that were raised at the planning stage by the person who did the planning in consultation with and hopefully reviewed by the partner or manager. The risks that were raised for expenses specifically is expenses may be incorrectly classified to operating expenses instead of cost of sales or vice versa. Classification, the reason that would be important specifically in this file, because the client presents the statement of profit or loss and other comprehensive income, or the income statement, with a function presentation for expenses. So we have cost of sales sitting above the gross profit line and operating expenses sitting below. As a matter of fact, we can actually show you that. So in the other testing material folder, there is something called statements of comprehensive income. If you open that up, you will see that we have a cost of sales line. Let me zoom in a little bit for everybody. Right, so we have a cost of sales line and we have an operating expenses line. So if there is a misclassification between our cost of sales and our operating expenses, at the end of the day, the profit before tax will be fine, but the gross profit and operating profit totals, well, no, the gross profit total will be misstated if there is a classification error. In the case of where the client presents their income statement by nature of expenses, then they will perhaps have amortization and depreciation, administrative expenses, employee costs. Then classification would relate to the correct allocation between the different lines on display in the income statement. All right. Minimize that. So we have a classification risk, and that risk is set as medium, and it's sitting in AVA because it's accuracy, valuation, and allocation. Okay, I always remember AVA as right amount, right account. Then I always remember what it is for. Okay. All expenses recorded in the accounting records may not have occurred or may not pertain to the company. So that is the risk raised on occurrence, that we're concerned that something is in the GL that did not happen. So we have a medium risk that was raised there at the planning stage. Expenses may not be captured accurately from the underlying documentation. So we are concerned about the accuracy of the number that was processed, and that is a medium risk. The operating expenses may not be appropriately disclosed in the notes, and that we've raised the presentation and disclosure low risk. And then we've got 2 employee cost risks, which we will go through in the next session. And then expenses may be recorded in the incorrect period, and so we have a cutoff risk. So just at this point, I'd like to just remind everyone that in terms of ISO 315, we do not need or require, the standards do not require testing where there is no risk. So in your audit, it's highly unlikely, well, I don't know, maybe that's a really silly thing for me to say, but in your audit, you may have one risk raised, you may have no risk raised, but you have to test something because operating expenses is usually a material amount. Maybe it's not a material amount and there's no risk and we're not testing it at all. Okay, so I think just keep in mind that we test in accordance with the risks that are raised. So in our case study, we have raised a lot of risks just to give you some sort of idea of what could happen in expenses, and we also wanted to get certain testing done, so we have raised risks in accordance with that. But remember that when you are on an audit, and for instance, if there is only an occurrence risk raised, you are only going to test occurrence. Okay, so the person who does the planning and raises the risks should also review the audit program and make sure it is tailored according to what we need to test. So just remember, you're not going to necessarily go wild and test everything. Okay. So if we take a look at class of transactions audit procedures, I just want to point out something while we are here. Well, actually, no, I'll point it out in a few moments when we get to the step. Okay, so step one was to agree the amounts and disclosures presented in the financial statements to the following and reconcile differences. So it was agree the amounts and disclosures in the financials to the trial balance and in the financials to the GL and control accounts. So this is just a recon. So imagine now I've got my financial statements, right? So I've got my financial statements and I've got an other expenses, an operating expenses line. I need to agree that to what's in my trial balance, so in your lead sheet, right? And then I need to agree that back to the, sorry, I just had a moment there where I thought it's not agreeing. And then I need to agree that back to the general ledger totals. The reason I'm trying to do this exercise is because I need to know that I am going to audit the correct thing, because if I'm going to audit this GL and I start selecting a sample and I test it and everything's wonderful and I fix the errors I find, but then I haven't built the bridge between my GL and what I've actually tested and what is sitting on my financial statements, then there's no point. I've wasted endless time, because if the amount in the financial statements is different, I haven't used the correct population to do my testing. Okay, so what I want us to do is, please can you go off to the general ledger. If you stand in column A and you hold control and press the down arrow on your keyboard, it will take you all the way to the bottom of the expenses GL extract. What I would like us to do is sum up the debit and credit columns. If you are using an analytics tool, it's a little bit easier. Like if you are using IDEA, it's a lot easier to get this done, but we're going to do it the manual way in case you are not an IDEA user. So if you stand at the bottom of column F and you click on this little auto sum button here at the top, it will give you the formula to sum up the column. So if you make sure you are sitting in on the very bottom number, you press Shift, Control, and the up key, and just carry on pressing the up key until it takes you all the way up. The other alternative is you press Shift and you go page up and go all the way to the top and make sure you are starting at the very first number. So now we've summed up that column. Copy that formula across to the block to the right, either drag it across using, so if you stand on the edge and it makes a little plus sign, you can drag it across, or you stand on the number and you press Control C and you move across to column G and you Control V. Then I would like you to just say equals the 19.4 million minus the 216 is the 19,189,663. Okay, so now we know our debits and our credits netted off. So I've got a total in my GL of 19,189,663. If you then go back to your Caseware, go to your lead sheet, we are going to use the prelim column because remember, we have passed a journal in Caseware. So our adjusted balance, the final balance, is after that journal. That journal hasn't been processed into our general ledger yet. The client said they will only process that journal in at the end of the audit. So we are going to reconcile to our prelim balance, the balance before our adjustments, 19,189,663.27. So we can see now that we are working with the correct GL accounts. Okay. Right. So from that, we're not going to do the same exercise, but if you go to the general expenses tab, you're going to have to just take me at my word. If you want to test it while I'm waffling over the next few steps, you can. On the next tab, it's called Gen Expenses. And what I have done here for you is we have extracted the general expenses accounts, excluding the employee costs. As a matter of fact, I will do the exercise for you just to show you. So if we do the same exercise on the column, oopsie. So if on the Gen Expenses tab, you do exactly the same exercise we just did and get to the net amount, we get to 10,330,998. And I'm going to just show you on your lead sheet. So employee costs, so we've got indirect employee costs sitting here. Employee costs are separately tested. I'll show you that in a moment. It has its own steps to test it. The reason being employee cost is not processed exactly like expenses. When you have an expense, you get a supplier invoice, you process it into the accounts, it goes through to the financial statements. With employee costs, what usually happens is it is processed through a payroll system, and that payroll system gets journaled into our general ledger. And what we usually do is we make sure our general ledger and our payroll system agrees, and then we actually test the payroll system. So it's a different type of testing, so it doesn't make sense. We cannot test it the same as the expenses. Right. So this number is the 6060386. What I'm going to do is actually the cute little trick that UNA taught me in session 1, and I'm going to control Windows key right and Windows key left, so we can have a view of both of those amounts. So that's 10,330,998. I'm going to add back my employee cost amount, so the 6060386, and I'm going to sum those two up and not get to the same amount. Oh, and then also, sorry everyone, one more thing, I'm going to drag that down there. The last thing I would like us to do is there's also on this lead sheet depreciation. So depreciation is usually, I'll show you in a moment what's happening in our file. In our file, depreciation is tested with the testing of PPE, and so it is not tested with our amount here. So we're also going to take out, add back, sorry, in our case, because we're reconciling back to our GL. You can do a little sum of, but because my ribbon has consolidated itself, I don't want to go find my little sum up button. Okay, so you can see if you want to just make sure my general expenses extract is correct. So if that general expenses extract is the accounts that we are going to test in this section, which adds up to the 10.3 million. Excluded from this GL extract is the employee cost amount because we are testing that separately, and also the depreciation because we are testing that separately. I do get back to my 19,189,663. So I know that I'm working with the right GL accounts. Okay. So in the audit program, someone has gone and done the exercise that we have just done, and they have agreed my GL to my trial balance, as I've just shown you, and they've agreed it back to the financial statements. Okay, the financial statements, just remember, is after the journal that we have passed. So this is going to, that 19,221 will agree to my after adjustment amount, the final column. Whereas my GL agrees to the prelim column because my journal was not passed in the GL yet. Okay, back to the audit program. Those steps have been signed off because they have been completed. Then the next step is for all procedures requiring a selection of items for testing, document how we tested the completeness and accuracy. So at any stage when we are testing something and that source of the testing is a client prepared information, we must verify that we have done or not done, but assessed the completeness and accuracy of the source of our testing. I will show you that in a moment. Please take note that it says for all procedures. So for all procedures where we're going to do testing, we would need to consider number 2 in the audit program. So in that case, it just makes sense that we document on each working paper where we performed our testing, how we established the completeness and accuracy. Okay, so I'll show you that in a moment. It says select material depreciation entries, and it says ensure it's tested either in PPE or here, and we have said depreciation is tested in section 305. How do I know this? Because I had a team meeting. So if you go to your other testing material, there is a document called team meetings TRAB discussion, TRAB meaning transactions related to account balances. If you open that up, the team had a meeting in the small boardroom run by me, everyone. Ha 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 ha. Okay, so the agenda was to discuss where certain sections are being tested, because depreciation falls within PPE, but it also falls within operating expenses. So in order to make sure that the audit is efficient and running smoothly, we have allocated the sections across to people. So our TRAB, or our account, so depreciation, which is sitting in cost of sales and OpEx, as a team, we decided, or I decided and a partner decided, that the property, plant and equipment is where depreciation will be tested, and that will be done by Kiana. The employee costs will be tested in operating expenses separately to my normal other expenses, and that will be tested by us, and we will do that in the next session. Interest received is going to be tested with the related balance, i.e. if it arises from cash and cash equivalents, it's going to be tested with cash and cash equivalents. If it's a loan receivable, it'll be tested with the loan receivable. Interest paid, we decided in our audit that we would test it with the related balance. We decided that cost of sales purchases, which is sitting on the cost of sales lead sheet, is going to be tested with the inventory balance, and that section is performed by Kiana. And then we also decided in that meeting that we are going to test the rent expense with the operating lease liability, not in the expenses section, and that will be done by Andrew Key. Okay, so this little team meetings is just to get across to you that somewhere in the planning, someone will think about where are we going to test the accounts that fall over or cross over between two things like a balance sheet and an income statement. And that is to allocate so that we have an efficient audit and everyone knows what their responsibilities are. Right. If we go back to our audit program, we now know depreciation is going to be tested elsewhere in section 305. Then you'll see number 4 says perform the procedures related to employee costs. And it says it's under transactions directly related to operating expenses. So if you scroll all the way down, past the conclusion part of the program, you'll see there is another section in the audit program called transactions directly related to operating expenses. And these are where the procedures for employee costs are sitting. So that we will perform in the next session. So for now, we're going to leave it, but this part is the employee costs separate section, a separate part of the audit program, not bulked with the operating expenses. Okay, so if you go back up, you can also use the navigation pane on the left-hand side, but if you go back up, so step 4 is going to be tested below. All right, then number 5 says select material operating lease expenses. As we've just seen from our planning minutes, the rent expense is going to be tested in the operating lease liability section, so we don't need to worry about that. But we comment on the program that is where it will be tested, instead of just signing it off and leaving it so someone has to go and figure out what's happened. Okay, often what I assume would happen in firms is that this procedure would probably be hidden here because it will be put into the program on the other side, but there is nothing wrong with leaving it here and making sure someone understands rent expense is going to be tested elsewhere. All right, then we are going to do procedure 6 together. So procedure 6 is to select material operating expenses other than those selected for testing above, and we're going to perform certain procedures, and we're going to select material operating expenses and test the VAT steps. Okay. What I do want to show you, because if you remember in 1220, we have ticked that we will be doing sampling. So down at the bottom of the audit program, there's a section called substantive sampling. And in here, you will see procedure 12 says, select a sample and extend step 6. And procedure 13 says, select sample and extend step 7. So procedure 6 and 7 is where we are going to test now. And procedure 6 and 7 refers to material items. And procedure 12 and 13 will refer to the sample which we are supposed to select, because that's the route we decided on when we did the planning. All right, so let's go off to the GL quickly, everyone. Also, there's one more thing I forgot to mention. We have not read through a system description today, but because other expenses actually has a risk in it. Sorry, I was waiting for the screen to catch up and I was wondering if everyone was still with me. Because other expenses has a risk in it, we would be required to put together a system description. That system description I've not put into the course today, but just be aware that it would need to be done. In the interest of time, we have skipped it for today because we want to get you to do some of the testing that needs to be done. But understand you would need to explain in the system description how the process works. So who processes, so who can, I want to say, authorize an expense or perform the action that gives rise to the expense, who gets the invoices, who processes it into the accounting records. So there might be, I don't know, for instance, a creditor's clerk that processes the invoice into the system. Do they then reconcile and make sure all the expenses are recorded, etc. So how it goes from the source into, or from the action into the financial statements even. All right. So the first thing I want you to do, I'm going to just delete my little totals that I reconciled back, where I made sure I'm working with the right thing. If you can go back up to the top, and then we're going to put in a filter. So if you want to know how I quickly got to the very top, I went back to column A, to the very last line in column A of my GL. I pressed Control, I pressed the up arrow, and it will go all the way to the top. I'm then going to apply a filter. So if you go to Data and Filter, I want to now test if there are, establish if there are any amounts over my performance materiality. Remember, everyone, we use performance materiality to perform the audit. I'm going to now apply a number filter to find if there are amounts over 800,000 Rand. So I'm going to say greater than or equal to. So let me just rehash that. So if you're standing at the top, apply filter under sort and filter under the data tab in Excel. It will give you the little arrows. Click on the arrow in the debit column in column F. Go to number filters. Go across to greater than or equal to. It is the fourth option. You can put in 800,000. I've always got to count my zeros to make sure I've got the right number, and then say OK. So do not get a shock. It is going to show you nothing. What this tells me is there is no material expense transaction in my GL extract. Okay, so then you can clear the filter from column F. If you do the same to column C, well, you can actually see column C. There are no material credits in column C, column G, sorry. There are no material credits there either. All right, so now we know we don't have material items, so the next steps were to do the sample. So what we've done, because we can't exactly let you all run off and do a sample because then we're not going to get to the same testing transactions. If you go down to the OpEx sample tab, we did select a sample out of the general ledger already. We ran our sample. In your firm, you will have a specific sampling methodology that your firm uses, whether it be haphazard or random number generation or statistical sample, and you will use that methodology to select your sample. Okay, so we have done that already. Okay, before we get into the testing, I'm going to do a little poll again. So we are now going to test occurrence. So this is going to be how I want to see how well you have been listening to me go on about sources. Right, so the question is, how do we test occurrence of a transaction? Do we test from the source to the GL, or do we test from the GL to the source? Right, so I'm going to just give you everyone a few minutes to answer. We don't have so many responses yet, but I see you all getting there, so I'm going to give it another little bit of time. Almost there, everyone. About 40% of you have voted. Just a little bit more. All right. Okay, well done, everyone. Well done for answering firstly, and then well done also for those of you who have said from the GL to the source. Okay, let's quickly pop back to the slide and I will explain why. Nicely done. Nice 60% of you voting there. Right. So let me just quickly, let's do a little rehash on occurrence because this is what we're about to test. So remember everyone, if I want to test occurrence is I want to make sure that the transactions which are recorded in my financial statements, my trial balance, my general ledger, the transactions that are there have in fact happened. So in that case, if I want to test if the transaction occurred, if it actually happened, that means it is in the GL. I want to make sure, did it happen? I want to select from the general ledger and I want to go to the source of the transaction. I want to make sure that there is a supplier invoice for it. It is a transaction that actually occurred. When I do completeness testing, I am worried if I do completeness that all the transactions which should have been recorded haven't. I'm worried things haven't been recorded that should have been recorded. So that means I need to start with the source and I need to work my way into the accounting records to make sure it was there. Okay, so well done, everyone. Right, let's get back to the testing. All right, so if we go back to the audit program, let's just quickly take a look at the steps which we will be doing. We will be selecting, remember we didn't find any material items, but when we went down to procedure 12 and 13, it said, go and look at procedure 6 and 7 and perform those procedures on your sample. Okay, so procedure 6 is we are going to select items from the general ledger. We're going to test costs and calculations in the GL accounts. Oh, I should have already done that. Okay, but we may not do that right now. I will say we kind of have established that it has been done because we have done our little recon to the lead sheet. So we added up the debits and the credits and we got to the same amount as the lead sheet. But you would actually have to go and test the costing and calculation of the GL accounts. Should be a very quick formula. And I will say, just be careful, everyone, because a lot of people will say, not necessary. It's a quick thing to do the formula. So let's do one account together. So if we were to go to audit fees and we were to then put in a formula, we would say equal to my debit amount minus my credit amount to start with. Oh, and it's just not going to be friends with me because I have not formatted something correctly. All right, let's do the quick, easy way. But you could use the formula to say, great, previous balance plus the debit will give me my 40,000. I actually know exactly what's wrong. And then I'm going to go previous balance plus, well, if we do the credit amount, plus the debit minus the credit, 60,000. So if I copy this down to there, I can see I get to the same amount my GL costs. All right, so that seems like a frivolous exercise, but it is not. Fraud is real, everyone. And when we are exporting a system into Excel, I can tell you from even putting the course material together, it's very easy to manipulate the GL in Excel. So we do cast and cross cast to check that no manipulation has happened to our general ledger. Okay, so I'm not going to do every account with you, but you would run the whole amount. Perhaps there is a quick, easy, and someone has excellent Excel skills and they do the whole GL at the beginning, then it's unnecessary. So just check in with the team and what the usual approach is. All right, so then it says follow through those transactions that we selected from the general ledger through to supporting documentation, agree the details on the invoice, test the accuracy of the source document, ensure the expense doesn't include capital items which should have been capitalized somewhere, and ensure the expenses related to the conversion of inventories are classified as cost of sales. So there's a classification step sitting in there, which also you will remember ties quite nicely in with our risk. Procedure 7 is about ensuring VAT was correctly calculated in accordance with legislation and it was correctly accounted for in the accounting records. Right, so if we go to in your Caseware file, so in your document manager, if you go through to, there's a document called 751. It is our operating expenses working paper. Open up the operating expenses working paper. Just waiting for it to open. Perfect. All right. So at the top, you will always have a top section. This working paper is you are today working for Fletcher Inc. And this working paper is a template working paper which was given to us by the firm. So we are going to just go through the top section, but it was usually be blank, or if you've drawn the prior year working paper into the current year file, then it might be that some of it is completed, but you actually need to check all of the information in the top part, right? And again, the top part of this working paper will give us important information to understand and for a reviewer to understand, which pertains to the testing that we're going to perform on the working paper. All right, so on your audit program, you would have been able to see the materiality figures. Let me just zoom in a little bit more for everybody. All right, so the materiality figures, so I will show you where they come from, so you can either flick with me or stay on there and double check it. So we've got an overall materiality of 1 million, and we've got performance materiality of 800,000, and our clearly trivial amount of 30,000. So on the working paper, we would then document those amounts, and we have referenced it to the audit program because that's where we got it from. The source of our testing in this case, I know I'm going to confuse you now, but the source in terms of what is on the top of the working paper is where did we get or where did we start our testing, and we are starting it at the GL. So we have selected from the general ledger. So the reason we put this in is so that somebody can look at this and go, they started from the general ledger, so they cannot be testing completeness, they must be testing the general ledger. Okay. We document how the completeness and accuracy of the population of the items were verified. The completeness and accuracy of the general ledger was tested in other areas of the audit. So remember, you can't just write the standard sentence, you have to give it some thought. And if we didn't test completeness and accuracy anywhere else in the audit, you cannot put a sentence there that says it's tested in other areas of the audit. So then we've given examples of what's happened in our file. In trade and other payables, the completeness of expenses tested through unrecorded liabilities, and the general ledger has been reconciled also to the lead sheet, and further accuracy testing is performed in the testing that we are about to perform. Right, what are we trying to accomplish on this working paper? In this working paper, if you go off to your audit program and you go to step 6 and 7, you will see our assertions that we are testing is occurrence and AVA, and go back to the work program. I've put occurrence and AVA on, so that is what we are trying to achieve or test. The risk level is medium. Again, if you flick over to the audit program and you go to the top where the risk block is showing, you can see that occurrence has a medium risk and AVA has a medium risk. Okay, back to the working paper. Then we are going to show whoever is looking at the working paper where did we test it from? So what was in our population for testing? We had the lead sheet total. This number should be familiar by now, 19,189,663.27. That's coming off of lead sheet 750. Let's quickly go there so we can show you. Right, so lead sheet 750, everyone, up at the top you can see there's a reference. And then I'm not going to scroll all the way at the bottom. At the top there's also a total reflecting. You can see that again our prelim before our adjustment, which hasn't been processed in the GL, was 19,189,663. So if we go back to the working paper, 19,189,663. Remember, we're not testing employee costs and depreciation here. So we take out the employee costs and the depreciation. You saw those numbers earlier, so I'm not going to flick back, but if you want to, you can quickly flick back to your lead sheets and take a look. Go and find employee costs. You will see the 6060 total for employee costs, indirect employee costs, and then the depreciation number that's sitting in operating expenses. The reason we take it out of the population here is because employee cost is going to be tested separately in the next section, and depreciation, as per our team meeting, is being tested with PPE in section 305. So the total population we are testing today is the 10 million rand. The sample size which was selected, so you would document whatever comes out from your methodology of how you test or established your sample size. There is also, by the way, everyone, a sampling sheet in Probe We will cover that in a future session. I can't remember if it's the May session or June session, but there will be a session on the sampling documents, so do join us for that. All right, for the purposes of our case study, we have selected a sample of 6 using a random number generator. Our audit program is 75010, and the audit work that will be performed on this working paper is procedure 6, 7, 12, and 13. All right, so at the top we've got some headings, which will guide us through the working paper. There is a heading which says material items. There were no material items noted in the general ledger. Do you remember we applied a filter and we checked, and there was nothing material which popped up? So I have commented that there were no material items noted in the general ledger because we want to tell someone that when they're looking for the material items, they're not going to find them because there weren't any. Okay. Again, and it's just explaining the process and how you went about it. So you've got to explain to someone who's looking at the working paper, we didn't find any of this. Right, so you will see that some of these items are filled in already because I wanted to go through some examples for you, and then we will complete the balance of the testing. We might do 2 or 3 depending on our time. Okay, so again, let me just quickly do a little split here for you. On the one side, I have the GL, and I'm opening the operating expenses tab. So, sorry, the operating expenses sample, OpEx, operating expenses, OpEx sample tab. So that's, remember I said to you, someone has selected the sample out of the GL for us. So this is the sample that came up. This is what has been transferred onto the working paper for the transactions we are testing. Okay, so you will see in the column headings, there is in row 34, general ledger information. The first column, column A, is just to show us the number of the transaction that we're testing. So we were selecting a sample of 6, so it's just numbered 1, 2, 3, 4, 5, 6. The account number is filled in, same as from our OpEx sample sheet. We have put in the account name. We have put in the date it is recorded in the GL and the description that has come out of the general ledger, as well as the amount that was recorded in the general ledger. Okay, so that is all extracted. I'm going to close the OpEx sample sheet. Oh, cancel. I'm going to minimize, not close. Apologies. Okay. So that general ledger information is the information out of the GL. So if somebody else was wanting to select or go and find those transactions, they have enough information to see exactly what was selected and where to go and find it. And as a reviewer, someone could come and see, okay, we have tested transactions out of these accounts for these dates. This was the description, and this is the amount that was recorded in the general ledger. If you scroll a little bit over to the right-hand side, you will see that the next part is as per supporting documents, and it is labeled as step 6B. So in step 6B, it says agree the information to the supporting documentation. So for the first one, let's now complete the first one. The first one was consulting fees on the 31st of March. It has a description of the GL, and the amount in the GL was 22,310 Rand. So in your folder, in the material given to you for today, there is a folder called invoices, and there is an invoice in there which is number 1 called Poveri and Associates Consulting. So open up that invoice. I'm going to again split my screen, everybody, just so you are able to follow along the information, but you are welcome to also leave yourself on the Excel sheet and put in the information or look at the information that I'm going to show you on the invoice, and we can agree the two. All right. So firstly, very important, the type of supporting document. Often we see on files that someone will just write agree to supporting documents, but we need to know what the supporting document was to make sure it was appropriate. So in this case, what we have here on the right-hand side of the screen is a supplier invoice. So remember, now we are filling in the information as per the supporting document. So now you're going to go to the supporting documents and we're going to have a look. I will zoom in a little bit for everybody. The date on this invoice from our supplier is the 31st of March 2023. So we are putting in the date on our Excel sheet of 31 March 2023. The supplier will be Poveri and Associates Consulting. We can see that. So where would we, sorry, let's also go back to where would we get the supporting information? We have provided it to you today, but how it would usually work is the sample would be selected. We would usually, two things could happen. I've seen it, I've experienced it either way. Sometimes we give the sample selection, so we'll give that extract of the GL to the clients and say, we need the invoices for these transactions, please. And sometimes the client is the one that goes and finds those invoices for us, and they'll send us either PDF copies, or they will come and give it to us if we're sitting in the boardroom at the client's premises, and we will then do this verification with those. Please take note, you do not ever write on a client's documentation. Okay, so unless we made a copy which we needed for our file, and then we can reference all over the copy that is going in our file, we never ever go and write on our client's supporting documentation. It will be given back to them. You do not lose it. You do not take it home to cuddle. You will give it back to them. Okay, so that's the one way, is they provide us with supporting documentation after we give them our sample selection. The other way is sometimes they will give us the files and we will go and find the supporting documentation ourselves, right? And then we will do this exercise. All right, so Poveri and Associates Consulting is what we were given by the client. So in that folder, we will, in our case study, say we got this from the client. So Poveri and Associates Consulting is the supplier. The client will be able to tell you generally who the supplier was or what the transaction is. They will have an ability to trace it either through the referencing in the GL or the description. Sometimes they will go and trace it through to the supplier ledger to find the transaction and who the supplier was, etc. Okay, so if you have to pull the supporting documentation yourself, they provide you with a file, they would just need to, you would just need some way to tie in its consulting fees with supplier invoice this to be able to find that, oh, this invoice is Poveri and Associates. Okay, so we could either ask them, can you tell me who the supplier is, or we could go and trace that purchase number to our supplier ledger, and that will, supplier ledger is like a general ledger except for each supplier. So instead of account names, it'll have supplier names with the transactions that happened with each supplier. All right. Okay, getting back to putting the information in, the document number is the invoice number, so we can see that up the side here, 17026. The amount excluding VAT, again, off of the supporting document. Let's go find it on the bottom right. So the subtotal is the amount excluding VAT is 22310, so we input 22310. The VAT amount they've got there is 334650. So I've put in 334650. And then as part of my costing and calculations to make sure my invoice costs, I've put a formula here, and that formula is adding up the exclusive VAT amount plus the VAT amount. And that's giving me 2565650. And I'm going to check that to the total that is reflected on the invoice. So 2565650. Okay. Now I have my information as per the general ledger and my information per the supporting document in my Excel working paper. I'm now going to go and perform the steps. So in your audit program, it has these steps, but for ease, I have put it into the column headings, and it is also just nice and easy to review if we do put the column headings as including a description like this. However, it's not a big deal. Also, if your firm's methodology is just put A, C, D, E, F there, and we must go and read the audit program and know that that step is cast and calculate details per supporting documentation, etc., then do it that way. Okay, go with what your firm does. For the purposes of our case study, we have included a short description of what we've done. So step A was cast and calculation of the GL account. You can actually, please just don't ever do this in real life, but we are going to tick that because I am going to tell you consulting fees does cast. If you go to the consulting fees GL account and cast it, it does cast, but I'm, in the interest of time, not going to do that step with you. But you can also practice that in the break to just go and test that consulting fees GL account does cast. Then the details per the supporting documentation agree. So let's take a look. I'm just going to make this bigger for everybody. So it is consulting fees. If I look at that invoice, it says consultation on HR policies and procedures. So yes, it was a consult, so that agrees. The date is 31st of March, that agrees. Also, just be careful with the date. If it's slightly out, but it's within the same period, it usually is acceptable. So remember, when we look at a cut-off or if something's in the correct period, we are looking at the year. We are not looking at, so we want to know that everything included in 2023 is supposed to have been in 2023 and everything that is after that. So if the invoice was dated for 2024, that would be a problem. Or even May 2023 is after my year, and that would be a problem. But even if this was dated, let's say 20th of April, or if it's sitting in January, it's still in the same period, so we would be okay with that. But I might go ask a question about what delay happens with between when the processing happens in the GL and when we've received this invoice. Okay. Then the amount is 22,310, and the amount excluding VAT is 22,310. So we have claimed VAT, and usually for expenses, it would be the amount excluding VAT because we could claim the input. But just be careful if there's something that we can't claim input VAT on, then I need to compare amount in GL to the amount including VAT. So we will compare and find out what the difference is. There is no difference here. So do the details per my supporting documentation agree to the GL? Yes, they do. Right, these little ticks, by the way, you will see up on the left-hand side, I'm sitting on Webdings, and if you sit on the block, you will see that it is an A, a little a lowercase a. Right, so the lowercase a on Webdings is a tick, in case anyone was wondering how I got that. Right, there's a mathematical accuracy of the source document. We want to make sure that the mathematical accuracy is correct. So do you remember we went amount excluding VAT plus VAT equals this, and we compared the amount including VAT to the total on the invoice? Yes, it's agreed, so the mathematical accuracy was correct. Be aware that if you had this, so we should also then test that 8 hours at this rate equals 22,310. So I'm going to open up my calculator, which is now hiding on my other screen. There we are. Okay, so my calculator, I'm going to say 8, oh gosh, hang on, 8 times 2788.75. That gives me 22,310, which is the subtotal that is there. So yes, my supporting documentation does actually is mathematically accurate. Then expenses which should have been capitalized. So if we read the invoice, so when we read the invoice, it says we did a consultation on HR policies and procedures. So that's not something that would need to be capitalized, for instance, to inventory or PPE. It was just an expense. So yes, or not applicable. There were no expenses which needed to be capitalized. And it's asking, so step F, by the way, step B, remember, was back here, okay, where we documented the information for the source document. Step F is the classification correct? So now we're going to look at, it was an expense, it wasn't a cost of sale. So yes, it is correct, it's not interest paid, it's not something that needed to go to other lines in the financials, it is correctly sitting as an operating expense. Just a point to note here, and I'll give you your break shortly, everyone. A point to note here that the classification between, for instance, consulting and audit fees, we might note, for instance, if the client has processed a consulting fee to an audit fee account, it's not necessarily a classification error for us because all of that is going to the operating expenses line in the financial statements. However, if we are auditing, we usually do not audit the detailed income statement. If we are auditing the detailed income statements, then we would have a little bit of an issue with that classification, depending on how much. Okay, then step 7 is the VAT correctly calculated? So we want to know now on our invoice, is this our usual 15%? There isn't something that looks to me like there shouldn't be VAT on it. So let's whip out calculate again, 22310 times 15, oopsie, divided by 100 gives me my 334650. So the VAT does appear to be correctly calculated. You can put a formula in this column L to calculate the VAT. However, I would warn that where you have a invoice that has exempt or zero rated items on it, the formula is not going to give you the correct result. All right, so is the VAT correctly calculated? It has been checked. And is it correctly accounted for in the accounting records? In this case, you would usually, we haven't given you the extract of the VAT account, but we would go and look. Firstly, is my expense excluding VAT? Yes, it is, 22,310. And then I would go and trace this 334650 to the VAT account in the general ledger. And you could just control F and go and look for that amount in the GL account. All right. So we are going to tick that for now. It has been traced to the VAT account. Right. So let's take a short break. Then we're going to go through one more example, and then we are going to actually do it for 2 or 3 items before we, just so you can get some practice in. All right, so I will see you in 10 minutes, everyone. Have a good break. Right, welcome back everybody. Okay, so before the break, we did go through one of the transactions that we have tested for occurrence. I did want to also show you. So if you open your folder with the invoices in, there's something called Tax Invoice Checklist version 2 SARS. So if you open that up, everybody, this checklist is available on the SARS website. It is to check that an invoice complies. If it is a VAT invoice, it complies with the minimum requirements for a VAT invoice in terms of the VAT legislation. Because if it doesn't comply with those requirements, we cannot claim the input tax. All right. So if you open your invoice on your side, let's just do a quick check. I'm going to do a split here so we are able to see. Just want this one out. Okay, I'm going to do this very quickly because we should also check when we're doing the VAT compliance, we check that it has met the requirements of a VAT invoice in order to claim that input VAT. Okay, so the first one, so firstly, let's just take a look. A full tax invoice is required where the amount of the supply exceeds 5,000 Rand. This invoice that we have for our consulting exceeds 5,000 Rand. So we are going to use this first checklist. An abridged tax invoice is where the supply is greater than 50 Rand, but less than 5,000 Rand. Then they can have a shortened version of the requirements. So not everything needs to be on there. So because we are on the first checklist, let's just take a quick look. Contains the words tax invoice? Yes, it does. Name, address, and VAT registration number of the supplier. Name, address, VAT number of the supplier. Name, address, and VAT number of the recipient, so the customer. Done. Serial number, meaning does the tax invoice have its own little number? Yes, it does. It is the tax invoice number. And the date of issue of the invoice, yes, we saw that because we even typed it into our working paper. Then we want to see, does it have an accurate description of goods or services? It says consultation on HR policies and procedures. That's a pretty accurate description to me. It tells me what has happened and why this invoice was issued. Quantity or volume of goods or services supplied. We've had, if it has a total number here, because it's a consultation service, that would also be all right, but in this case, they specify, we did 8 hours, the rate is this, and here is the value of the supply. Right, then the value of the supply, tax charge, and considerations. So the value of the supply is this, the tax charge is the 334,650, and then the total is the consideration which we expect to receive. All right. I see we have a question about finishing at 12 or shortly before. I will definitely push to finish by 12, but we should be wrapping up by about 3 minutes too. So you should manage to catch it all, never fear. And I'm super glad you asked that question because that means you're quite interested in the session. All right. Let's quickly go back to the working paper. Right, so we use the tax checklist when we want to, or we should be using the tax checklist to test that the VAT compliance is there. Right, then let's quickly go through the insurance one, and then you are going to do the motor vehicle one along with me, so not just staring at my screen. So if you go through to your folder again and you open up number 2, Netstar, I'm just going to quickly again do the split. I have lost my Netstar invoice. Here we are. So number 2, they've got an insurance amount and they've got a description of Netstar for 648 Rand. Remember that information came out of the general ledger. Then we have as per supporting documentation. Again, what are we using? It is a supplier invoice, so we will document supplier invoice. What was the date on the supplier invoice? It is, I see it's a little, sorry. It is here, it is 1 June 2022. They have it in a very odd place. The supplier is Netstar. the document number, so we can see they've got tax invoice 1863, so we document the tax invoice number. The amount excluding VAT, 648, so we transfer that across to the working paper, 648. VAT amount, 9720, transfer that across to the working paper. And again, I've put in a formula so that I can check the cost and calculations of the invoice. My formula result is 745.20 and the invoice result is 745.20. Right, then we get to the actual testing of the steps. So the GL account we are going to accept because I'm telling you, usually you would go and do the test that I showed you earlier. In the interest of time, I'm going to skip that part because it's easier to understand. All right, there is another question which is with respect to that compliance checklist, do we also check the invoice to confirm it meets the checklist? And if it does not, the client should not have claimed the VAT. Yes, so we're going to touch on that again in a moment. For what the implications are, but yes, so if we are going to claim VAT on our invoices, we do need to check it to the that it meets the requirements for a VAT invoice, and we do have an example. I will actually skip to that example next after we finish up with the Netstar invoice, and then we can finish up touching on that. Good idea. All right. So the cost and calculation is a GL. Details as per the supporting document agreed. So again, is it the right date? Is it the, they have classified under insurance, which is fine. Netstar is, I suppose, similar to an insurance in terms of the fact that it is a tracker for your insurance. So no problem there. So the details in terms of the date agrees, the details in terms of the amount agrees. So we are going to then tick details per the supporting documents has been agreed. The mathematical accuracy of the source document, again, you're going to whip out your calculator or use Excel, whatever is going to work for you. My calculator keeps running away to the other screen, which is getting a little bit frustrating. Okay, so the unit price 648 plus my VAT of 97.20, and so I've got 745.20. We also knew that from doing the formula on the inputting of the information. Right, then the expenses which should have been capitalized. Do we need to capitalize paying for our tracker? No, we don't. It is a service fee essentially. So yes, it goes in the vehicle, but we're paying a service fee for them to monitor the tracker the whole time. So not applicable. There were no amounts to be capitalized. Is the classification correct? Is it an expense? Yes, it is an expense, so we can tick that. Is the VAT correctly calculated? So again, you can take out your calculator or Excel, or sometimes there's cool other tools that you can use on the actual PDF document that can sum it up for you, but I have none of that available to me today, so we're going all old school. So if you take the 648 times 15 divided by 100, I get 97.20, so the VAT is correctly calculated. And then we went and we traced it through to the VAT GL account. So we are going to take that. Also, we can see that the transaction is recorded excluding that. And then let's do our last little check, which is check it to the checklist. So does the invoice contain the words, again, so this is under 5,000 Rand, right? So we can check the abridged tax invoice checklist. Does it contain the words tax invoice? Yes, it does. Is the name, address, and VAT registration number of the supplier on there? Yes, it is. Here at the bottom, you can see that the address is displayed, the name is displayed, and the VAT number is displayed. Does it have a serial number? Yes, the invoice has a specific number, and it has the date of issue on it. Accurate description of the goods or services? Yes, it's telling us that there is a tracker or it's an invoice for this registration number vehicle. What is the value of the supply? 648, value of the tax 97.20, and total value of the supply. So it does meet the requirements for a valid tax invoice. This time we're using the abridged checklist because it's under 5,000 Rand. Okay, so let's skip to, I will tell you which one we're going to do now, just so we can wrap up on the VAT side. So you can do the motor vehicle and oil, but we'll get back to that in a moment if we have some time. Let's skip over to the transaction number 4, printing and stationery. Okay, so please could you open in your supporting document folder, your invoices folder. Number 4 is called Open Door Stationery. So please open that invoice for me. So printing and stationery, again, copied the amounts or the details of the transaction from the general ledger. We have pasted it in here. Type of supporting document we have. This is where you're all got to type for us, please, everybody. So it is a supplier invoice again. So I'm going to type in supplier invoice. Then the date of it, take a look over there on the top right hand side. It is the 24th of August 2022. Who is our, or what is the name of our supplier? It is Open Doors Stationery Pty Limited. And what is the invoice number? It is C584. The amount excluding VAT is showing as 1148. Then we've got the VAT amount of 172.2. Again, if you want to put your formula in here, you can, but be aware that you must check it to the supporting document and check if there are 0 rated or exempt items on the invoice. So I'm going to use a formula this time just to show you the difference, but please also be consistent on your working paper. Right, and then I'm going to add up those two, and that gets me to a 132020, which agrees to the invoice. So we also know now that that cost and cross costs. Okay, in terms of the difference, so I didn't show you, I think, the formula, but that difference column is calculating. Make it bigger for a moment for everybody. That difference column is calculating based on, let's copy it down quickly and I'll show you. It is based on what is the exclusive amount versus the exclusive amount, assumption being at this point that we are going to be able to, or yes, that we are going to be able to claim the input VAT. I see there is a question. Let me just quickly see what it pertains to. Mathematical. So it asks about the mathematical accuracy of the source document. Say a supporting invoice has 10 pages. Are we expected to manually check each line to confirm the accuracy, or we can use the subtotal excluding VAT, check if the VAT amount is correct? It's a very good question, because this does actually happen where an invoice is pages and pages long. In terms of that, what we usually do is actually do a spot check on some of the lines on the invoice. So make sure it essentially cross calculates. So if there's a quantity times price equals a line total, so we'll spot check a few lines. And then you can also do a little bit of a logic check if you run down the numbers on the page to see if it sort of makes sense with the total, and then yes, recalculate excluding VAT plus VAT equals the total. If you have one of the tools which you are able to use on a PDF document, which can sum up the invoice, it's obviously better because you're able to do the whole thing. But know if the invoice is 10 pages long, please don't go and do every single line, because you're going to be sitting there for days. So we will do just a spot check to see that it is correct. All right. Also, just check in with your manager or your AIC, so the accountant in charge on the audit, that is the way your firm does things. Just to be sure, because some firms, I don't know, I've yet to come across them, but there might be some that are really concerned about things, and they will do maybe a longer test. So just check in with them as well. All right, so I'm going to cast and cross-cast the GL. You would obviously go to the GL, cast and cross-cast the account called printing and stationery, and make sure it casts. In the interest of time, I'm going to tell you I have done it before the course started. Okay, did the details agree? Yes, we don't have any difference. Let's quickly check out the date. So the date was the 24th of the 8th in the GL. That is what we have here. And in this case, we can also see that the description tells us that it agrees to the supporting documentation. Okay, so I'm going to take that. Mathematical accuracy of the source document, we have checked that it adds up, so I am going to copy across that. Expenses which should have been capitalized, let's take a look. Our invoice was for a black toner cartridge. So this is generally just a little consumable in our printers. It's not something that gets capitalized. It's not a significant component of my printer, so not applicable, nothing needed to be capitalized there. Classification, is the classification correct? Yes, we have bought some printing costs, a toner cartridge, which is an expense. It is not misclassified it doesn't need to go to cost of sales because the company does manufacturing of packaging material. Right, then let's take a look at whether the VAT invoice meets the requirements for a valid VAT invoice, as well as whether it calculates correctly. Okay, so we did the formula in this case in our working paper, so I'm not going to check that because it did come out correctly. So I'm going to close that. Let's see. So we've got an invoice which is under 5,000 Rand. Okay, so contains the word tax invoice. It just says invoice, so there's a little bit of an issue there. Oh no, sorry, there's not an issue there because it does say, it can just say invoice. The name, address, and VAT registration number of the supplier. So it's got the name, it's got the address, but if you take a look, nowhere on this document is the VAT registration number of Open Doors Stationery on this document. So that's a bit problematic because now I cannot tick the little box. So in terms of the rest of them, it's fine. It's got a serial number, it's got a date of issue, it's got a description of the goods, everything else is fine, but I can't tick all the boxes. And if you read this little sentence at the bottom, it says, note, all 5 criteria must be met for the invoice to meet the requirements of an abridged tax invoice. So in this case, I don't have a valid tax invoice because the VAT registration number of Open Doors is missing. So in that case, I now need to make a note on my testing. So the VAT is correctly calculated, but we haven't accounted for it. So let me quickly show you this. So if you had the VAT account, you would see we have claimed VAT on this invoice. We can also see that my GL amount of 1148 agrees to my amount excluding VAT, meaning I have claimed the input tax on this. But because I don't meet the requirements, the invoice doesn't meet the requirements of a valid VAT invoice, we shouldn't have claimed the input VAT there. So we're going to write a note. So that's going to say N1. And over here at the bottom under the notes heading, I'm going to write N1. I'm going to just quickly make that green because that is the color we use there. All right. And then I'm going to now write the invoice from Open Doors Stationery does not comply with the requirements for a valid tax VAT invoice. I cannot type now. Therefore, input VAT may not be claimed. Okay, but now everyone, I need you to think a little bit further than the transaction that we are just looking at. If you go to your GL account, so let's just open up the GL account quickly. I'm going to just show you. So if we find our stationery account, you will see that there are a number of transactions with Open Doors. So Open Doors has a whole lot of transactions here. So we deal with them more than once. So my problem is I would then go and ask the client, can I see another invoice? But I can probably tell you that invoice will look exactly the same as this invoice in terms of missing the VAT number. So if that were the case, and I went to the client, please can you show me another invoice, and it is the same problem, I now need to assess, well, actually, the VAT that shouldn't have been claimed is across all of these transactions here, right? So this is what I can see is open doors just from the GL is 11,450. You would also need to ask your clients, are there any other transactions with open doors sitting here that don't have the same description but is from them? And you would need to find out if this is it. In our case study, I'm going to tell you that this is it, 11,450. So now the thing we're going to document on the working paper is total invoices from open doors in the GL is equal to, I'm just going to put it in this column here so it's easier to type in the number. So the VAT input claimed on this total would have been that times the 15 divided by 100. So they have claimed 1,750 Rand in VAT that they shouldn't have claimed. So for purposes of our audit, this amount is trivial. And because it is a specific problem specific to open doors and this invoice, I am going to conclude that it is trivial. But I will show you an error on our next invoice that we're going to process, which we can't do a similar item. Right, the next thing we need to consider is the fact that this is a compliance procedure, the VAT. So if you go to your audit program, the fact that they're not claiming VAT correctly means we have a reporting item. So I'm going to just quickly show you this so you can just follow along. But in your audit program, you've already dealt with this before. In the conclusion, procedure 1, it says, are there matters to be communicated with those charged with governance? This item that is a VAT error, because it's non-compliant with laws and regulations, we are going to report it to them. So we're going to say, yes, we have something to report. And when you click on the little risk button, it takes you through to the RTM, the report to management. Okay, so if you open the report to management, now we're going to watch the mesmerizing blue circle a little bit. If you open that and you go down to the operating expenses, we have already given you an example of the item which you would then raise, which is VAT has been claimed on invoices from open doors. These invoices do not comply with the criteria for a valid tax invoice issued by SARS. So the VAT input is misstated on VAT 201 submissions is what the implication would be. And then we recommend that they request from open doors an update to the format of their invoices. So in terms of the VAT legislation, you have 5 years to claim the input tax on something. So it is not that we need to reverse. Well, they have invalidly claimed the VAT, but they can go and rectify and ask the client, please ask the supplier, open doors, to reissue the invoice with the VAT number on it to rectify the non-compliance. In terms of, you will see in procedure 1 in the conclusion, it then goes on about no clause, so non-compliance with laws and regulations in terms of the code, as well as considering a reportable irregularity. The amount in total is 1,700 Rand. It is very small, it is trivial. And so here, no clause, there is if the error is clearly inconsequential, it doesn't fall within the no clause provisions of the code of conduct. We don't need to follow all of the steps to see it through to the end. So it's just inconsequential, so it falls outside of no clause, and it is not performed by management. It is the person processing the invoice that made the error by claiming the VAT. It's not a non-compliance performed by management, and therefore it's also not a reportable irregularity. Okay, so I hope that kind of gives you some principles across how to deal with where an invoice does not comply with the VAT requirements or a valid tax invoice requirements, because then there's other considerations like what is the problem, how many invoices is it a no clause, is it an RI? We have to report it to management because it is a law regulation requirement. Okay, So then I would like us to skip along quickly to transaction number 6, and you guys can go and practice the other transactions, by the way. It's really good practice to make sure you have or you can do the testing by yourself, but I'm going to skip because we are going to run out of time, and I really want to show you the difference between the two errors. I'm going to go over to number 6. So if you go to your supporting documents folder and you open up the security services invoice, I'm just going to move this to the other side of the screen for you because we're going to get confused. All right, oopsie. Okay, so number 6 is security. And here, again, we've got a supplier invoice. So we're going to type in supplier invoice. Then we've got a date, and the date on the invoice you can see on the top left is the 1st of August 2022. Let's just quickly, while we're doing this, check it to the date in the GL, the 1st of August 2022. So those details do actually agree. This tax invoice is from down at the bottom, everyone. You can see 24/7 security services. Okay, so we're going to type in 24/7 security services. Oopsie. That's what happens when you're fast typing. And the invoice number on the top left, you can see is IR913. And the amount excluding VAT is 31874.78. The amount of VAT, I am going to do a formula, but take note. So when you go and do this exercise, please take note. One of the documents in the exercise, which you're going to go do by yourself, does have 0 rated items in it. So make sure you pay attention to the VAT that has been claimed. Okay, in this case, we're going to just do this quickly. So that 478122 does agree. So I've put the formula in to calculate the VAT. It does agree to the invoice. And then I'm again going to do the formula to get to the total. And that total does agree to the total on the invoice. So now copy down the difference. Oh gosh, sorry about that. So copy down the difference formula. If you take note, everybody, there is now an error popping up. So the amount excluding that we've got in column F is 3202695, but the amount excluding that in column K from our invoice is 31874. So there is a difference here of 152 Rand 17. So it doesn't actually agree. So again, we've crossed and cross-crossed the GL. The details with the supporting documents do not agree. So now you're going to write a note. So my general rule, everybody, is also if there is an error, you never put a cross, you put a note to explain what the error is. Okay. So N2, and I'm going to say the amount per the GL does not agree to the supplier invoice. So now the problem is we have got to calculate. In this case, it is not an error that could be specific to 24/7 security services. This is a processing error that the client has made in the GL. So now we need to do a different sort of calculation. I can't just say the 152 Rand is trivial. I need to now establish, is that this is the error that came up in my sample, but I've got a whole population that I was trying to test. So now I'm going to say this misstatement is 152 Rand. So I'm going to go and find that 152 Rand quickly. And then I'm going to say the total sample I tested is, you will see this formula is already in there, but the total sample tested is the amount that I pulled out of the GL, the 133,054.71. So that error rate needs to be calculated. So this is just an estimate of how much the error could be across the whole population. It's better to have a statistical sample when doing this. let me just do this quickly. Okay, I'm just making it more numbers so that you are able to see what the error rate comes out as. Okay, so then the population, so remember the population we were trying to draw a conclusion on is our 10330, right? So our total population we were testing on this working paper, and then the projected error, or you can call it an estimated error because projected error is really about a statistical sample, is my percentage times my total population, okay? So my percentage, my error rate times my total population should give me an estimate of how much I think the total error could possibly be in that population as a whole, and that comes to 11,815 Rand 20. Now, if you go and then look at our clearly trivial amount, that is 30,000 Rand. So the 11,000 Rand is under the 30,000 Rand. So now we can conclude that this is a trivial error. Okay, so that is because this is a different type of error. This is a processing error. This could happen across any of our invoices, but we want to not have to extend and extend and extend. We can't sit testing the whole GL. So we estimate what's the potential error we have in our whole of expenses. It is 11,800 Rand. So we're going to conclude that it is trivial. Okay, so please go and make sure you just practice. I will give you a little hint. Motor vehicle, petrol and oil, there are some exempt VAT items. So just when you test that, you are going to have to just pay attention to how you are calculating the VAT and agreeing the invoice. And then the consumables, go and test that one and see if anything pops up there. Okay. So then I'm going to quickly pop back to the audit program. I hope you enjoyed at least doing some testing in the expenses section. So let's just quickly go to, so once you are finished, by the way, once you are finished testing all of your expenses, please can you then go and sign off the audit program steps. Remember that even though we have noted those other two errors, they don't mean I have exceptions that cause me to have such a problem with expenses that I need to qualify my audit report. I did find misstatements, but I concluded that those misstatements are trivial, even if they were not trivial, but they were still immaterial, and I dealt with them accordingly on overs and unders. It means I can still draw a conclusion that I'm satisfied it isn't that expenses is materially misstated. So I can still sign off the audit program. All right, then I'm going to just quickly go through the rest of the steps. When you are doing cut off on expenses, if you are doing cut off on expenses, you would then select expenses before year end towards the end of the year, so the last few expenses processed and first few expenses processed in the next period, and you would test if the invoice is recorded in the correct period. But it's not just the invoice date, everyone, it's the date that the service or the goods, so the service or the goods was delivered. So also just pay attention to that. In this case, in our case study, we didn't test cutoff because we have commented that trade and other payables, unrecorded liabilities testing tested cutoff for us. And we had trade and other payables recons, and we had bank recon testing. And so we were satisfied in our case study that we didn't need to test the cutoff. But remember, in order for me to make that comment, I would have actually had to speak to a team member or know what was going on in other parts of the audit. And so I would check in with the team, have we adequately tested cutoff of expenses, because it was a risk raised in this client. Journal entries, we will cover that in a different session in our last session not our last session, in session 6. So I'm not going to go through that now. And then the presentation and disclosure, please go ahead and read through this. The presentation and disclosure is the tie-in with the financial statements. It is very important that we always think about the end result of the audit is the opinion that we are issuing on the financial statements. So always, always, always make sure you build the bridge between the financial statements and the testing we have performed. Substantive sampling test here at the top. These steps we will go through when we do the sampling sheet for probe and the sampling session. We will go through what these steps mean. 12 and 13 is the steps that you tested, and step 14 is the journal testing, again, which we'll cover in another session. All right, this conclusion has been completed, but technically we still need to go and do the employee costs, which we will do in the next session. So do not worry about it. We will use the same Caseware file also for the next session. So you can keep this file handy if you don't want to download another file for the next session. All right, then we have our little two things which we need to finish off with. One being, please can you complete the survey? If I could ask someone to just one of the oh, look at that, it's already posted. So there is a link to the survey in the chat box, so the same place you would have found the link to the material. If you could please complete that survey, and perhaps before you start that survey, I have one question for someone to win a small prize. I'm trying to get my slide up. Okay, let's just go past the slide quickly. Right, so what I would like is someone to reply in the chat box, the question box. First person to reply will get a small prize sent to them. So I would like you to name 3 things we inspected when agreeing the transaction from the GL to our supporting invoice. So the first person to answer me in your question chat where you ask the questions will get a prize. Oh, good job, guys. Okay, we do have a winner. So the first one that got all 3 sent to me at the same time is Melanie. So well done, Melanie. You are all doing a fantastic job though, guys. I like it a lot. You definitely were paying attention in terms of giving me or in terms of what we were checking today on the supplier invoice. So thank you very much for that. If everyone could please just complete our session survey so we can take your feedback, the good, the bad, whatever feedback you have to give. We do love taking your feedback in terms of knowing where we can improve, knowing where we're doing a good job, what's working, what's not. So please make sure you take the time to just complete that survey for us. I have really enjoyed spending this last 3 hours with you. Thank you so much for your participation, for the questions, for paying attention. I really can see you were with me all the way. And we will see you then on, let me pop over to the next slide quickly. We will see you then on the 5th of April, well, on the 4th of April 1st for the financial statement session on balancing a note, balancing the cash flow and related party notes. And then on the 5th of April, we'll see you in terms of probe audit for the audit of employee costs, which will finish up our audit program, which we worked on today. So thank you so much, everyone, for joining us, and have a great weekend. I know it's not starting for some of you just yet, but enjoy your afternoon. Go and practice those last transactions, which we didn't finish up with. And good luck. And if you have any questions, please either save them for the next session and ask, or send us through an email, however we can help. Thanks a lot.